Every day, the ETF complex is buying roughly 3 times the number of Bitcoin that are mined. So I got the halving socks on today, and that's only for the next 3 months. 3 months from now, that number goes from 900 to 450. If the same pace keeps up, which I think is pretty likely, you're going to be talking 6 times the daily production. And so that is a supply-demand imbalance that will lead to rising prices.
Spot Bitcoin exchange-traded funds have been the main focus of the cryptocurrency industry for 8 straight months now. First, there was the excitement about BlackRock applying to offer a spot Bitcoin ETF. This was followed by months of anxiety and excitement about whether the ETF would be approved or not. Since the approval was announced on January 10th, all hopes of massive price moves have been dashed. After the initial price increase to $49,000, Bitcoin's prices have pretty much been stagnant. According to expert analysts, this was caused by investors hurriedly moving money out of the Grayscale Bitcoin Trust. The bad news is that over $6 billion has exited GBTC in less than 1 month of trading. The good news is some of that money is being pumped into other Bitcoin ETFs, and the GBTC sell-off is finally trickling to a stop. Yesterday, CoinShares reported that spot Bitcoin ETFs received over $700 million in fresh investments last week, with inflows to the newborn 9 successfully offsetting the tapering outflows from GBTC. According to the latest data from the asset manager, BlackRock's IBTC and Fidelity's FBTC booked $884 million and $674 million in weekly inflows, respectively, more than both ETFs booked the week before. In the same week, investors withdrew only $927 million from GBTC, significantly lower than the $2.2 billion outflows recorded the week before. The report further highlighted that the new ETFs had amassed $7.7 billion in funds as of the end of last week, well over $1 billion more than the GBTC $6 billion outflows. During the latest episode of Blockworks on the Margin podcast, renowned hedge fund manager Mark Yusko shares his Bitcoin outlook for the rest of 2024 and 2025. Yusko explains that we are heading for some exciting times for Bitcoin. On the one hand, the GBTC outflows are almost over, and other ETFs are taking in a lot of demand, maybe even more than previously expected. On the other hand, the 2024 halving is now less than 2 months away. When the Bitcoin block reward is halved, it will create a supply shock, which will be immediately exacerbated by the ETF's demand. We will now bring you clips from Mark Yusko's interview. Don't forget to give this video a thumbs up, subscribe to the channel, and turn on the notifications bell for more videos like this. Thank you and enjoy the video.
The idea that all of the money, right? We've talked about all the different estimates from, 30 billion if, investors that the captive investor base in these brokerage firms that haven't been allowed to participate, is roughly 30 trillion, pick a number. And 0.1% would be 30 billion. And that would move the market. And we've seen about a third of that. We've seen a little over 10 kind of come this way, but it doesn't happen in day one. I would argue that 0.1 is even kind of a silly number. I think it's easily going to be 1%. So that's 300 billion. But what we saw was a bunch of the big guys said, oh, no. Even though this is a BlackRock or Fidelity approved ETF, we're still not going to let you buy it with your money. So people said, well, I'm out, right? I'll just leave and go someplace else. But eventually, I think they're going to change their minds and that money will continue in. Rising prices beget rising prices, right? Once an asset starts to move, people are drawn to it. That's the way it works. And that will push us past fair value into, silly levels sometime in the crypto fall that'll start, next June. And a year from now, I think we'll be talking about, oh my gosh, how did we get to triple digit Bitcoin? And when's the bear market coming? Because there will be another bear market because the FOMO gets really extreme as you start to go parabolic in any asset, like NVIDIA right now. I mean, Tesla before. I mean, NVIDIA right now it's amazing to watch. the volatility, it's from this side. Its volatility is trending down and I can't, it's reversed on my screen. I can't do it. It's confusing my brain. But volatility Bitcoin was triple digits when it started because it was a science project. There was no there. It was super vol, a little penny to 2 pennies. That's a 100% move. But as it has gotten more mature and gotten bigger, that volatility is now trended down. It's like in the 40s, long-term still closer to 65, 70, but we're definitely going to trend down. And it's because the passive holders, hodlers are part of that, but now the ETF is structurally a passive holder. Leverage is also down. So there's not as much leverage and as much speculation. There will be more leverage. Leverage will come back, but there's not as much as there was. So I don't disagree with that at all. But the passive versus active debate is a tough one because the more passive there is, the more you just keep reducing the supply, and that's like a supply shock. And that 3% number is actually probably not right. Not that your number's not right, but no, I just saw this stat that kind of blew me away. I mean, I knew the lost or stolen component of Bitcoin was big, but I never saw it in a visual. The estimate is that 5 million of the 19 million coins that have been mined to date are untouchable. Lost, stolen, stuck in multi-sigs where somebody's passed, or that's a big number. And even if it's not right, it's probably not off orders of magnitude. And so that 3% is probably more like 5% and trending to a very large number. So supply shocks will lead to higher prices.
Like all other prominent Bitcoin investors, Yusko's prediction for Bitcoin is that it will at least smash the $69,000 all-time high before the end of the year and hit 6 digits before the end of the bull market in 2025. In the following weeks leading up to the halving, Yusko predicts that Bitcoin will slowly move toward $50,000 per coin, its present fair value according to several price models. Yusko also predicts that the famed crypto fall will begin 2 months after the halving, and that's when we will get the really parabolic moves. Between June 2024 and mid to late 2025, the hedge fund manager predicts that Bitcoin will at least hit $150,000 in the base case and even $300,000 if things go better than expected. Let us know if you agree with Yusko's predictions while we bring you more clips from the podcast. This time, Yusko discusses his outlook on the overall US economy.
I mean, look, the idea that they were going to cut rates now it was always silly. And I guess the market, right? And what is the market? It's the collection of the participants. I think actually believe they could bully the Fed into it, which, because it's always that, well, this predictor is always right. Well, no, it's not causative, it's correlative. I think that was the first thing. So the idea that suddenly we were going to be in a world where rate cuts were not only necessary, but were politically palatable, I think was silly. Now, we are in an election year. And as we get closer to the election, I think the odds go up dramatically that there'll be pressure from the incumbents to cut rates. So that I think is real. But again, if you look at history, when do Feds cut rates? They cut rates in response to economic weakness and recession. Like we're literally in recession. It hasn't been called yet, but if you look at the chart, you got the gray bars, and those are the recessions, and the rate cuts start inside those gray bars, but those gray bars haven't been called at the time of the rate cuts. That's kind of like the acknowledgement by the Fed that things are getting bad, and then 9 months later, the powers that be, the NBER, say, "Yep, you were right. There's a recession." So, not anywhere close if you look at the data, particularly GDP data surging. Now, that's a false flag in that Q4 GDP. It's like, yeah, look how great we are. That is the best $300 billion of GDP that $800 billion of fiscal deficit could buy. If I pay $800 billion for something, I better get more than $800 billion. Don't give me $300 billion. Where the hell did the other $500 billion go? Interest and other places. So there is a bad multiplier effect in government spending right now. It's worse than the normal government spending. Government spending has a negative multiplier. What you want for economic growth is corporate borrowing and spending, not government. Government crowds out private. So that's bad. So that's the first thing. It's just a myth that, we just pumped up the economy with fake money. And anyway, so we got that. Then second thing is jobs. And, you and I've talked about this ad nauseum, so I'm not going to belabor it, but they're going to keep faking the jobs numbers. And I sent you the analysis the other day that, it's like 50% of the reported jobs then get taken off later in adjustments, but no one looks at the adjustments. So whatever. So they're going to keep lying about jobs. And so no chance that you could just say, we're going to cut. Now, does that really matter? Well, the market response was pretty quick. To me, the more important thing from the FOMC was the removal of the lines about how stable the banking system is. If you've been watching in the last couple of days, bank stocks are getting cremated, and the BTFP, Bank Term Finance Program, BTFP, ends March 11th, right around the Ides of March, which is not really a good time normally, historically. I think, pick a number, 15%, 20% of banks are going to be bankrupt, like out of business. And what's going to happen?
With the Bank Term Funding Program slated to end in March as previously scheduled, many experts are expressing concerns about the immediate future of the regional banking sector in the United States. Experts predict we could have everything from a moderate crisis that will take out a few banks and force the Federal Reserve to announce more funding programs to a severe one that will shake the banking sector and negatively impact other sectors. Others have also warned about a brewing commercial real estate crisis, which could further worsen the situation. However, Federal Reserve Chair Jerome Powell has expressed strong optimism about rate cuts in 2024. According to the Fed chair, the FOMC only needs a few more good data, not even necessarily better than what we've had in the past month, just good enough to justify rate cuts. Do you think the Fed will cut rates in 2024, especially if another banking crisis develops? How do you think such actions will impact Bitcoin and crypto prices? Please drop your comments and observations in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.